So we'll begin 240. Auditor's responsibilities relating to audit of financial statements, relating to fraud in an audit of financial statements. So auditor's responsibilities relating to fraud in an audit of financial statements. See, earlier the standard was there in CA Inter as a separate chapter. In the old scheme of CA Inter, you have a chapter called fraud responsibilities. Now there it was removed and kept it here with little more content. So entire that standard 240 is added in CA final with little more content. Entire, I mean, I can say entire pronouncement book 90% of essay 240 is copy pasted here. Almost 90% of the essay 240 is pasted here. So what is this fraud is about 240? Fraud means what? First of all, we know very well misstatements can arise either from fraud or error. Intentionally a misstatement might happen in financials, or unintentionally a misstatement might arise in the financials. If intentionally the misstatements are arising, we call it as fraud. If unintentionally comes, it is error. And fraud is again classified into two categories: fraudulent financial reporting, misappropriation of assets. Fraudulent financial reporting, misappropriation of assets. Now, what is the objective of the auditor under 240? Are we supposed to identify the frauds performed by the management? No. Our objective is to do risk assessment. When we are doing risk assessment, we are liable to identify risk of fraud. We are liable to identify risk of fraud. Suppose if at all any risk of fraud you identified and assessed. You identified and assessed any risk of fraud. You need to obtain sufficient appropriate evidence for that particular, like you have to design appropriate audit procedure to address that risk. If you identify any risk of fraud, you assessed that risk, like high level or low level, you assessed it. Assessment of risk means classifying the risk nature. Is it high level or low level? What is the level of risk? Remember, whenever you are classifying the risk as a low, you must have evidence why you classified it as low. You must have evidence why you classified it as low. So the auditor has to obtain, obtain sufficient appropriate evidence with regard to assessed risk and respond appropriately. So how to respond if at all we identified a fraud or we identified a suspected fraud? How to respond? That is what entire 240 standard is explaining. You know, this 240 standard says, management is primarily responsible for prevention and detection of fraud. The management is primarily responsible for prevention and detection of fraud. Management primarily responsible for creating a culture of honesty, which can be achieved only by an active oversight by those charged with governance. Only if there is a top management supervision control, then only a culture of honesty can be inculcated, culture of honesty can be achieved. Then what is the responsibilities of auditor? Your responsibility is to conduct audit and see whether financials are free from material misstatements. Your responsibility is to conduct audit and see whether they are free from material misstatement. And we all know, because of inherent limitations of audit, we cannot detect all the material misstatements, whether due to fraud or error. That too, detection of frauds depends upon so many factors. Detection of fraud depends on so many factors. It depends upon the perpetrator's skillfulness. How the person committed the fraud, how skillful he is. It depends upon frequency of the fraud. It depends upon collusion involved. Suppose if there is a high collusion involved, it is very difficult to detect a fraud. Relative size of amount manipulated, how much amount they are manipulating. If the big amount is manipulated, it is generally easy to identify, but if small amounts are manipulated, it's difficult to identify. Seniority of the individuals, if top management performed the fraud, it's not that easy to identify. If a low level management performed the fraud, it is easy to identify. Seniority of the management who performed the fraud. So there are so many factors, that affect auditor's ability to identify frauds and errors. It is not that easy for the auditor to identify fraud. Errors are easy to identify comparatively. Therefore, what auditor has to do? You should identify potential opportunities for the fraud. You should do a risk assessment. You should identify fraud risk factors that creates opportunities, that creates pressures, that creates an attitude of an employee to commit a fraud. You should identify whether any such symptoms exist or not, where a fraud can happen. Fraud indicators, we call them as what? Fraud indicators or fraud risk factors. You're getting it? No. And remember, the risk of fraud, the risk of not detecting management fraud is greater than employee level fraud, because management is generally in a top position to manipulate the records also. Now, this fraud is classified by the standard into two types, as I told: fraudulent financial reporting, misappropriation of assets. Fraudulent financial reporting means what? Manipulation of records, manipulation of accounting, manipulation of financial statements, manipulation of books and records and financial statements is called fraudulent financial reporting. Misappropriation of assets means what? Stealing of the entity's property, using the entity property unauthorizedly, using business property for personal use. All these amounts to treat, all these are activities are amounting to misappropriation of assets. Correct? Now, both of these leads to a material misstatement in financial statement. When you manipulate records, misstatement will be there in the financials. When you misappropriate cash, when you misappropriate inventory, when you misappropriate assets, real assets are lesser, but the balance sheet shows higher number because this fraud is not discovered. Therefore, the financial statements show overstatement. That will not show the real entity's assets availability, because the real assets are manipulated, real assets are misappropriated. Understood? So these are the two types of fraud. So what auditor has to, what is the responsibility of the auditor? What the standard says: since considering all these factors, please maintain skepticism. Please maintain skepticism that recognizing a fraud is difficult than recognizing error. Remember, fraud detection is difficult than error detection. Now, how the frauds will be done? Like I told, right? There will be risk factors. Auditor has to do a risk assessment. Like, our risk assessment means very simple. We need to understand the entity. We need to understand the functions, departments. We need to understand what are the roles and responsibilities, what are they doing, and what processes established, what systems they established. Within the systems and procedures which the company established, is there any way that people can manipulate? Is there any way where people can commit fraud? Like, you need to identify, is there any incentive and pressure? Is there any opportunity for the people to commit? And how the attitude of the people working in the organization. You should study all these three elements. Are there opportunities for fraud? For example, you found out that there is a huge cash balance is there. There is a huge cash balance is there in an entity. Why that much cash balance is there? Okay, cash balance is there. How they are keeping this cash? They are keeping it in a normal drawer with a basic key, security key. The key is not that secure. Like normal computer tables and all will get racks. Is that key that secured? Even if the key is lost, nothing to worry. You pull it strongly, it will come out. Yes or no? So in that kind of particular locker they are keeping so much of cash they are keeping. Is it an opportunity for anybody to commit a fraud or not? Identify that opportunities. Is there any such kind of opportunities? Now remember, the opportunities for fraudulent financial reporting is different from the opportunities for misappropriation of assets. Right now, the example which I told is for misappropriation of asset. For fraudulent financial reporting, the opportunity is different. For example, related party transaction is there. Through related party, company can engage into complex transactions and manipulate the position and performance of the company. For FFR, the opportunities are different. For misappropriation, the opportunities are different. Same way, only if opportunity is there, a person may not commit a fraud. There must be a necessity for him. There must be some benefit for him. There must be some pressure upon him. So see whether any pressures are there, whether any incentives are there for any person to commit a fraud. See whether the management is under pressure. Whether the management is under pressure to achieve some earnings target. To achieve some earnings target, is the management under pressure? If so, there is a possibility they commit a fraud. They may commit a manipulation of records. And if pressure is there, see, is there any opportunity for them to commit a fraud? Yes, they are transacting with so many related parties, so there is a high possibility they will inflate, and see whether their attitude supports it. By interacting with them, you will understand what is their perception about the entity, what is their attitude, history of complaints received on them. By looking at all this, you will understand whether fraud risk factors there or not. Now we have examples. Now, why fraudulent financial reporting is performed? Why people manipulate records? What is the reason? Because entities' performance and profitability, they want to show, they want to manage the earnings to deceive financial statement users by influencing their perception. Therefore, we can raise some additional funding. Therefore, we can raise some additional loans. Earnings manipulation, they may start with small actions, but pressures and incentive may lead to these actions to increase the extent of manipulation. And these situations, moreover, pressures from market expectation, analyst expectation, all these causes directors to choose some accounting policies that favor them. Getting it? And some entities, they may want to reduce the earnings in order to pay lesser taxes. They want to hide the earnings. How this fraud is permitted, how this fraud is conducted, how this FFR is conducted, how they manipulate? Very simple. They manipulate the records, they alter the records, they put false records, they record false transaction, they intentionally omit some expenses, they intentionally misapply the principles. Capital expenditure, they charge it to revenue expenditure, they won't charge, instead they capitalize. So many ways they do. Now, fraudulent financial reporting often involves overriding of internal controls by the management. Generally, fraudulent financial reporting will not be conducted by small level employees. It is generally conducted by big management, high level management. How they control, how they do this fraud? By overriding the controls. By overriding. What is overriding control? Very simple. The company, if they have to pass a purchase transaction, there is a voucher has to be prepared. That voucher has to be authorized by somebody. The voucher has to be prepared by somebody. For that, supporting bills and all should be there. After verifying this entire process only, the entry will be passed and the manager will approve it. Then only the entry will reflect in the accounting records. This is the control. Overriding means what? Not following this control. Not following this control. So management commit frauds by overriding controls. How they will commit? How overriding will happen? What are the examples of these frauds? FFR often involves overriding of controls, like by using some techniques. For example, recording fictitious entries, adjusting assumptions and judgments to estimate accounting balances, provision for bad and doubtful debts, intentionally calculating at a lesser level, vomiting some transactions, or preponing the recognition, delaying the recognition, or omitting it at all completely, concealing or not disclosing facts to the auditor, or in the financials, engaging in complex transactions, altering records and terms and conditions that are significant and unusual, engaging in related party transactions outside normal course of business. These are all various ways frauds can be committed by management by overriding controls. Now, how auditor should verify this? How auditor should verify this? We have a separate question on that. 11th question. Audit procedures, you see in this. You have a concept called response to assessed risk of MMS due to fraud. You have a concept called response to assessed risk due to fraud. Inside that, one of the sub-concept is what auditor will do to the risk related to overriding of control. Suppose you identified a risk of overriding of controls by the management. How you will verify whether management overrided and recorded fictitious entries, omitted transactions? How do you identify? I will simply test the journal entries which they recorded. I will test the journal entries what they recorded. Whether they are fictitious or not, I can find out easily. I will review accounting estimates. How they may do Frauds related to overriding of controls, they manipulate the estimates, they manipulate the judgment. That's what they do. Now what I will review whether the estimates are proper or not. For significant transaction outside normal course of business, what is the business necessity, what is the business rationale, I will verify of the transaction. Are you getting it? So you see the previous topic, fourth question, how management override the controls. Fictitious entries they'll record, they omit transactions and events, they prepone recognition or they postpone recognition, they manipulate accounting estimates and significant judgments, they engage in complex transactions. These are all the ways how management override the controls and commit fraudulent financial reporting. How do you detect this? I will review the journal entries. I will test the journal entries, what they recorded. I will test the vouchers and transaction. I will review the accounting estimates which they have chosen. For significant transactions, I will see what is a necessity. Suppose they engage in a complex transaction. Why you can directly buy from them? Why you buy from X to Y, Y to Z, and Z to the other party? Why you did this much big chain? At the end of the, they are all related parties. Why you bought like this? Such a complex transaction. Why? Business rationale I verify. Are you getting it? Both the questions are not same. Remember. Both the questions are not same. Don't confuse this and that. What are the auditor's response to address risk of internal controls overridden by management? That answer is this. What are the ways how internal controls can be overridden by management? Give you techniques. Answer is that. Understood? Clear? Next. Entirely I'll cover. Don't worry. I'll come to like that interlinked points. Now next let us look at how misappropriation of assets will be done. How misappropriation will be done. How they will do? Either they will misappropriate cash, or they misappropriate theft, or they record fictitious transactions and misappropriate the asset, or they may use entity assets for personal use. Correct? One is receipts related fraud. Another one direct asset fraud. Another one third party involved in the fraud. Another one, no, like I'm not misappropriating anything. I'm using it, the company property, I'm using it for my personal use. Which personal use? Authorized, unauthorized? Unauthorized personal use. These are the ways how misappropriation of asset will be conducted. Sometimes if misappropriation is with supporting evidences, suppose you made the entity to pay third party for the goods purchased for your personal purpose, but you recorded everything like for company purpose, all the transactions, stock records, everything tallied. It's not easy to identify. Correct? Next. I'll come back to that again. What are the examples of risk factors for MMS for misappropriation of assets? Suppose if at all misappropriation of asset is happening, how do you find symptoms for that? Like in a company, whether misappropriation is happening or not, will there be any indicators? If you don't know, don't worry, standard is giving explanation. You read the standard, see whether are there any such indicators in the real entity or not. Like for example, standard is telling you some opportunities will be there. Like what? Large amount of cash on hand. Why the company is keeping large amount of cash on hand? Inventory small in size, high in value, which means there is a possibility of misappropriation. Fixed assets with small in size and marketable, lacking identification marks of ownership. That is a fraud risk factor. Inadequate internal controls, very important. This was asked many times in exam. Inadequate internal controls. If internal controls are inadequate, that could result in misappropriation of asset. That could result in misappropriation. What do you mean by inadequate internal control? Proper segregation of duties are inadequate. Senior management expenditure on that no supervision. Inadequate oversight of employees responsible. Top management is not top management is not serious about employees who are dealing with assets. For example, store manager is careless, cash department manager is careless, inventory related maintenance, in all, whoever dealing with assets, no, management is not caring them, like management is not looking at how they are functioning. Inadequate record keeping, inadequate authorization and approval, inadequate physical safeguards. There are no cameras, there are no locking systems and all. Lack of complete reconciliation. That's why we need to check whether physical verification is happening at reasonable interval or not. If at all that is not happening, that's a fraud risk factor. Understood. Next, lack of timely documentation of various transactions, lack of mandatory vacations. Like especially in companies, no, store managers will be given 1 week leave. Rotation of duties will be there. There will be rotation of duties. Like another store manager will come and do. Why rotation and all will happen? So that frauds can be detected easily. Inadequate access over automated controls. Inadequate understanding of information technology. Today, most of the controls are implemented through systems. Most of the controls are implemented through systems. Best example, you're a self-service portal in ICA. Yes or no? You raised one request, articles completion or something, articles registration or something form. You raised a request. Your principal has to approve it in the online. ICA department has to approve it over online. That is how in companies also controls implemented. Suppose I want to place order, purchase order. You placed, suppose you are the purchase manager. You placed order. It will not go to the vendor. First it has to be approved by some CFO. It has to approve by finance manager. In their system it will reflect. They will see whether this purchase order is proper or not. Once they say, once it is approved, then only order will be placed with the seller. Which seller? Which supplier? Only the supplier whose name is listed in the company profile, company data. Only with that seller you can place. Okay, you placed order. You are receiving goods, right? How many you can receive the goods? Only that many ordered. Suppose the supplier, no, he sent, you ordered 100 units, supplier sent 120 units. You can't accept 20 units. Why? Your system will not accept. Now, once your goods are accepted, the store manager should give a GRN to the other party, right? Yes, I received goods acknowledgement. He can give acknowledgement only for 100, not for 120. If this kind of control is there in the automated system, automated control, we call them as what? Automated controls. If this kind of controls are implemented, what happens? Employee cannot purchase the goods unless all of them are colluded. Purchase manager, CFO, and stores manager. Not just that. Once I gave GRN, then only I can enter 100 units. Then only accountant can pass a journal entry in books of accounts. Only when journal entry is passed, finance department will see the liability due on the due date and remit to the supplier. These many people are involved. Segregation of duty. Big companies will have these kind of sub-departments, sub-processes. We call them as what? Sub-processes. When a fraud has to happen here, all of them should involve. Are you getting it? Maybe you can manage finance team at last, but remaining this entire chain must collude. Only then purchase related fraud happens. Only then sale related fraud happens. You are getting the point. So if at all controls are inadequate on this, misappropriation can happen easily. This itself can be given as a 4 marks question. And I told right previously just now, write about overriding of controls by management. What are the techniques? That can be asked as a 4 marks question. Or they may ask you as a 4 marks question, what are the auditor's response to the risk of overriding of controls? Whether you assessed it or not doesn't matter. Whether you found overriding controls or not doesn't matter. You must test some sample transactions. You must review accounting estimates. That and all you must do, right? Whether the risk of overriding is there or not. Clear? 1 minute. Okay. We'll discuss simultaneously what are the opportunities for fraudulent financial reporting. What are the opportunities for fraudulent financial reporting? And I notice people who are watching my marathon at 2x speed. Super ultra legends. Like, they only focus on finishing the video, not learning from the video. So painful, taking a revision session is. That's why I take only once in a year. Until I step out of this class, I will be very conscious. If I go down, gone. That's it. I'll go and sleep. You speak for 20 minutes, you will understand the pain. Not speaking, shouting. Getting it? Actually, no. Otherwise, how will you sit intensely? You'll be sleeping. I need to wake you up sometimes in between. Yeah, we'll continue. Right now we have seen opportunities for misappropriation of assets. The opportunities for manipulation of records will be different again. Misappropriation, what? Controls are not proper, somebody can steal. Cash is so much, somebody can steal it. These are all for misappropriation, which are generally performed by low level employees and middle level employees. But top level employees, they try to do fraudulent financial reporting. What kind of opportunities were there? Like, I would just like to give you this analysis. In private sector, suppose Reliance itself you take, or you take DMart, Avenue Supermarts. Suppose in Avenue Supermart, CFO is there, or let's assume some executive person is there. DMart turnover is close to 1 lakh crore. Close to 1.2, or maybe some 80,000 or 90,000 crore. Approximately 1 lakh crore plus only it is there. Their purchases are close to 50,000, 35, 40,000 crore. 35 to 40,000 crore. If at all the person who is dealing with purchases in DMart just increased the 2% the prices of the purchases, he can make a fraud of 600 crore. You're getting the point. If a director who is dealing with particular activity, if at all the director is just influencing the prices of all the purchases by 2% with the vendors, and this director will take a kickback. In the sense, this director will settle that amount later on. The company, I am just a director, I don't have any shares in the company. Based on my competence, this company appointed me as an executive director. But if I have this bad attitude, 2%, just 2% enough, or 1% enough, 35,000 crore multiplied by 1%, 350 crore fraud we can do. This is the scale of opportunities that is there in big entities. I'm just telling you. Private sector, the corruption is high, not the public government sector. Government and all 2 crore, 5 crore only, nothing. Private sector is so big. Reliance Company, Indian Oil Corporation, where the purchases and all are like thousands of crore. 1%, do you think they won't do? They definitely do. They definitely, see, at the end of the day, I have to approve you. My supplier, the director has to approve. The supplier has to be approved by whom? Director has to approve. That's why you see, that's why most of the directors' entire thing is monitored by SEBI. What monitoring? Nothing. You can't do. Will you tap my phone and listen? No, right? You tap it, I use another phone. That's the kind of directors do so many frauds which you can't even predict. Then what to do, sir? How to do? Nothing. That's the system. That's how the system. He will have his own thought process. He will have his own thought process. What thought process? I am bringing this much business. Without me, this much profit and all, people will not get. Further, you are paying 10 crore remuneration yearly. What are you thinking about me? That's the kind of attitude directors will have. I'm bringing this much business, thousands of crore profit I'm doing, bringing and distributing to all of you more than your market more than your market available returns. Your shares prices are increasing, value appreciation you are getting, and you're paying me 1% remuneration for profit. Company success, what? 11% of the profit is the maximum remuneration for all the directors put together. The directors do all this kind. Getting it? 1% fraud if they do, this is the size of fraud, scale of fraud they can do. Definitely opportunities will be there, not just real frauds will be there, but we don't find that. So that's why vendor system, vendor selection process, all that, everywhere process implemented. But ultimately, human being is the one who will control. You put tender mechanism will be there. For example, tendering process is there. See, in vendor audit, when we are doing vendor audit, we see tendering mechanism has been unbiased or not. The people who put tender itself will control. You're getting the point? The people who put tender, that itself will control. How come you will give public advertisement for tenders? I'll give advertisement. You will not find it. At least somewhere a small box in the newspaper. Who will read that box and place a tender? So the one who can put a tender, I can influence. In government audits, they will show. In government, some movies also they will show how government, like contracts and all, they will get thousands of crores of dealing. Just 1-2% manipulation enough. Lifetime settlement. That's the kind of fraud they do, directors and all. Any company, listed company, these are possible. Next. So, opportunities. The nature of industry or the entity operations. What is it? Nature of industry. That gives some opportunities. Entity operations provide some kind of opportunities. For example, entity operations, significant related party transactions in not ordinary course of business. What do you mean by related party transaction not in ordinary course of business? Substantial discounts were given. That's an example of not in ordinary course of business. terms and conditions were altered after the transaction is entered, that's not in ordinary course of business. So in all these cases, related party transactions is one of the most possible opportunity where frauds can be committed. Strong financial presence, ability to dominate certain industry that allows the entity to dictate the terms and conditions, non-arm's length transactions. This is an industry factor. This is nature of industry. Nature of industry is providing for you to do certain frauds. For example, I'm the monopoly or oligopoly. Only few sellers were there. We all can unite and decide arm's length price. We can easily cheat tax authorities. Are you getting it? By entering into transactions that are at non-arm's length price, we can manipulate profits and pay lesser taxes. Next, assets liability is subject to high judgments, high uncertainties. There are so many significant estimates, so many judgments are there. All these assets and all, I will take improper assumptions, I will take improper judgments and all, and do fraudulent financial reporting. I can show the profit of the company much better than the actual profit they have. Look at, see, imagine when you are reading this audit, imagine these big companies like Reliance, Adani, these companies, they will have all this. They will have all this. Now, significant high complex transactions, especially close to period end, nearly at the end of the audit, near the period end to the closing financial statement, suddenly doing fraud. Next, significant operations located across international borders. Many transactions, operations which are at international borders, where they are bringing some questions about tax laws applicability, all that. Business intermediaries you are using where there is no clear business justification. Why intermediary purpose? You could have directly purchased their shares, no. You could have directly purchased the goods from them, no. Why intermediaries you are using? Something is fishy. Getting it? Significant bank accounts where there is no clear business justification. You're operating, you're having so many bank accounts in so many tax haven jurisdiction. What is the purpose? Monitoring of management. Sometimes, no, there is an opportunity like this. Top management monitoring is not effective. Top management monitoring is not effective. For example, domination of management by a single person. For example, Reliance Group itself you take. Though there are 14, 12 directors, only Ambani family will dominate entire decision making process. Getting it? And oversight by those charged with governance and financial reporting process where controls are not effective. There is a complex or unstable organization structure. For example, in the organization, who is responsible for what? You can't identify clearly. Unstable organization structure, difficulty in determining role of the individuals, complex structure, high turnover in top management means top management is frequently changing. All these are fraud risk factors, opportunities. These are all creates opportunities for people to commit frauds. The standard is giving all these examples, right? You should see whether any of these symptoms there or not. If you don't know how to figure out fraud risk factor, you see these many factors. Here they have given 1, 2, 3, 4, 5, 6, 7, 8, plus 7, 15 opportunities are described for conducting fraudulent financial reporting. Definitely in the company that you are auditing, some symptom will be there. Then if you find the symptom, how to investigate that symptom. Getting it? Next. So they'll give you questions like this. Internal control components are deficient. Internal control components are deficient. For example, the entire entity system, like how an entity functions. Big entities, they will have a system. That system is called as what? Internal control system. Internal control system is nothing but set of processes followed by the entity. What are these processes? These processes are broadly divided into 5 categories. 1, control environment. 2, risk assessment process. 3, implementation of information systems. 4, control activities. 5, monitoring activities. You're getting it? Like, let us take this classroom as an example. This has a system. This entire classroom, this particular college might have a system. They have implemented a system, that's an environment. That entire system is described as what? Environment. For example, like they might have a policy document where every day what employees have to do, especially non-teaching people, what they have to do. Teaching staff, what are their duties? When they have to do all these duties, like some document might have been there. This is control environment. Top management must be committed towards a proper control environment. 2, information systems, like they're taking attendance, they're taking who are attending, all that. Yes or no, all that. Now, how these information systems are generally developed based on risks identified. What is the possibility in running a college risk? A student who have not paid the fee but attending the class, that's a risk. For that, they will implement some control activities. Getting it? Like as soon as you're entering, checking whether you registered or not, checking whether you have an ID card or not. This is control activity. Whether this entire control activities, whether these systems, whether risk assessment, whether control environment, all these are properly working or not. There is a monitoring department, internal audit department, that's monitoring activity. Are you getting it? These are the 5 components of internal control. If at all any of this component of internal control is deficient, that's an opportunity for fraud risk factor. Correct? So deficient internal control component, like monitoring controls are inadequate, high turnover rates, accounting systems, internal control systems, they are not adequate, they are not proper. Metro rail you take, if you have to perform the journey in the metro rail, for example, I did around some 4 or 5 years ago, but still I think the same control is now also being continued. The moment you go, you want to travel from A to point A to point B, you need to pay the money and get a token, some coin, something. Are they giving coin or card access? QR code, very good. So QR code, you need to go at the time, barricades will be there, electronic barricades, you need to show the QR code, just like airport, something. Yeah, so you need to show this QR code scan and the barricade will open, then you can go into it, you can get into the train. And after arriving your journey, then you need to get down, again you need to show the QR code and and the barricades will open, then you can go outside. This is how the basic typical control. Now on the ticket, if the backside you see, sometimes they'll be printing 30 minutes only valid this is, 40 minutes only valid for this, 2 hours only valid for this. Why that hours of duration is mentioned clearly? So that you will not use the journey to meet another persons, another places, another metro station, and going to the other side of. I think this control is weak in metros even today. Like you can simply change the platform. Suppose I have to go to point A to point B, I have to get on at point D, but I will take only A to B, but I will go to D point, meet my friend again, come back in the same platform and come back to A and then come out. Yes or no? This weakness is there. But at the end of the day, what metro authority, though control is deviated, control objective is achieved. You should not get on it other than station B, after station B. This is the control objective. What is the ticket objective? What is the ticketing? The control objective is you took ticket from A to B. You should get on only at B or before B. But you cannot get on after B. Correct? Maybe you would have gone, roamed sometime, used the resources of the metro rail, all that and came back. But at the end of the day, you will get out where? B only. This is control objective is achieved. Correct? Though there is a deviation of control. Are you getting it? That also auditor has to report that also service auditor has to report. You see that service auditor has to report in 3402 what are the control objectives, whether the deviation is there, even though the control objective is achieved, deviation shall also be reported. This is the example for that. You're understanding? Because in metro also they will do this audit. This audits will be there. The entire system audit will be there. Metro system audit, complete system. Now this is called operational audit. What is this called as? Operational audit or operating audit, we call it as. Next. Attitudes. So this is opportunities. Understood? You need not at all the points. 4 points enough. 4 marks question only. 4 to 5. Preferably what we'll do is, if a 4 marks question comes, we'll write 5 to 6 points. If a 5 marks question comes, we'll write 6 to 7 points. What if in that question only 4 points there? You should write only that 4 points. You're clear? Next. Now, will there be any incentives? Like we found opportunities. That is one reason why the opportunity alone is not sufficient. There must be need for the person. There must be some benefit to him, or he must be under pressure. Any of these 2 reasons could be the reason for fraud. Like pressures. Why a person will manipulate the assets? Why a person misappropriate the assets? The pressures are different, right? Like he may have personal obligation, personal finance obligation, and he is a cashier, he can easily do the fraud. Adverse relationship between the entity and the employees and company has adverse relationship. For example, he know that he will be laid off very soon, or his recent changes to his compensation was not proper. He was given a decrement, not increment, or he was given promotion but inconsistent with his expectation. This could be the reason why the employee was agitated. The employee would have been felt bad about the company and will do fraud. No matter how loyal amount, this company will never recognize, so I will cheat now onwards. Correct? That kind of attitude. See whether such a kind of incentives or pressures exist on the employee. Like now let's identify incentives or pressures for FFR. For people who are doing fraudulent financial reporting, for them the pressures are different, like high competition, high vulnerability to changes, decline in customer demand, operating losses where threat of bankruptcy is coming. I want an investor or funding persons right now. If I have to get a funding people, I have to manipulate my results. Recurring negative cash flows, rapid growth or unusual profitability, especially compared to other companies, new accounting. Suddenly in this company, rapid growth is there. Suddenly, that could be a risk factor. You should see why rapid growth is there. Unusual profitability compared to the industry, new accounting requirements, excessive pressure exists for the management to meet requirement, like due to trend level expectation by investment analyst, like third part, whenever a company quarter results are being published, it's like election result today, how it will be. The same way, stock market, you see all the CNBC, all these channels and all, NDTV, all this. So they'll be discussing continuously whenever a company results quarterly, results are as expected, results are not as expected. Expectations create a pressure on the management. Additional debt or financing requirement, companies having some additional or finance requirement. Marginal ability to meet listing requirements, perceived or real adverse effect of poor financial results. They may be feeling poor financial results may bring negative effect on the company. They may perceive like that. Or really the company financial position is bad. So in all these cases, they try to do fraud. They will give you this question. Excessive pressure exists for management to meet requirements or expectations of third parties due to various reasons. Give examples of those reasons that results in fraudulent financial reporting. 4 marks question, they'll give you this. Understood? All of you? Information available indicates that personal financial situation of the management is threatened by entities. This is another one. Suppose a director gave guarantee to the company thinking company will perform very well so that he can benefit. But the company is completely bankrupt. I am the one who is becoming liable. So in order to remove the guarantee, provide an alternative security, I manipulated results. And somehow got some new borrowing, somehow like that, and relieved my guarantee. So significant financial interest in the company. Significant portion of their compensation is only from this entity. Personal guarantees, excessive pressure on the management to meet financial targets established by top management. All these information available indicates personal situation of the management is threatened by entity's performance. Suppose the director is too much dependent on this company and this director was told by the chairman, if you did not bring a new loan like this, I will fire you. Where the director monthly obligations and all will affect. So what this director might do, somehow manipulate, bring some funds and then satisfy the chairman. Correct? So any of these ways can be done. That's it. So these are the incentives or pressures. Then now remember, not just incentive, not just opportunity. There must be, the person must have the attitude also. The person must have the character also to commit a fraud. Whether you need to identify, is there a such characteristic? That's why many companies go for management audit. Many companies go for what? Management audit. To identify and assess management attitude. How are the decision making process? If you recollect, in SQC, the auditor has to verify before accepting the audit, before accepting an engagement, is management aggressively concerned about how are the business practices? Are they aggressively concerned about business practices? That's the nature. You need to figure out the nature of the management. Some managements are like, I don't bother anything. I should be always number one. For that, they would do all types of frauds in the industry. So attitudes are realizations. So auditor has to check whether any attitude, for example, changes in behavior of the employee or a lifestyle. The sudden changes in behavior and lifestyle might indicate he has committed some fraud. Tolerance for petty theft. In the company, thefts and all being tolerated, which means the company is not really implementing controls. Behavior indicating dissatisfaction with the company. Employee, when we are interacting, he is very dissatisfied with the company. That indicates, that he is trying to commit something wrong to the company. Disregard for internal control. Disregard for need for monitoring. Monitoring activities and all, companies not taking care. Whenever internal auditors are coming for checking, they are saying come tomorrow. Disregard for monitoring activity. Disregard for controls over assets. whenever some controls, suppose no, security guard is asking ID card each and every employee. Director said, you know me, right? Don't ask me ID card. I'll come directly. Disregard to control. Getting the point? So controls violation, monitoring activity violation, these are all various attitudes of the management, behavior of the management that indicates a fraud risk factor for misappropriation of asset. Understood? Same way for fraudulent financial reporting, the attitudes are different. The attitude are different. Management, the way they are communicating, the way they are implementing, the way they are communicating, implementing, supporting entity values are not effective. The communication of ethical values to employees is not effective. They are not communicating. They have not established any standard. When you were recruited newly by any company, from 15 days to 1 month or 1.5 month, training will be there. What is there in the training? They explain you code of conduct in the entity, what you have to do, what you're not supposed to do. They explain you code of conduct on a serious tone. They'll tell you, like, that indicates companies, like, the top management is like committed towards quality, committed towards culture of honesty. You're getting it? So, for example, non-financial management is excessively participating in accounting policies. Non-finance people, what is their relevance for accounting policy? That indicates they want to do some fraud. Known history of violation. Excessive interest by management in maintaining stock market prices. Participation by the management where they are giving aggressive or unrealistic forecast. Management is failing to remedy significant deficiency in internal control. They know that there is a deficiency in internal control, but they are failing to remedy. That's why you see in 265 they say, once you communicated significant deficiency, you should follow up whether the deficiency is rectified by the management or not. We have to follow up. If they are not rectifying, which means something intentionally they kept the deficiency. Low moral among senior management. Disputes between shareholder, recurring attempts by management to, like, they're modifying materiality levels frequently, all that. Strained relationship between the management and current auditor. This itself can be asked as a 4 marks question. This was asked once. Management and auditor, the relationship is getting strained. That could be the reason. Management attitude in that scenario is one of the proof that they're trying to do some fraud. How relationship gets strained? Frequent disputes with auditors, unreasonable demand on the auditor, unrealistic time constraint. Last year auditor didn't ask this information. Why are you asking? Have you seen this? Restrictions on the auditor, restrictions on the auditor that inappropriately limit access to people. Suppose I ask a company, I want to talk to external lawyer. No sir, they will not talk to you. They are very busy, all that. They will not let you. Domineering behavior. Management is dominating on you. These are all various indications that they did something wrong. You're getting it, all of you? That's it. So with this, over. Standard is not over, is there? Only half is over. Not half, 60% is over. So ultimately, what the standard says, you have to maintain professional skepticism. By the way, skepticism means what? Seeing the director as a fraud, that binds it. No. Unless auditor has reason to believe, the auditor may accept records and documents as genuine. But if conditions, as I told before, fraud risk factors, incentives, opportunities, and attitude, if you identify those conditions, then only you need to be alert. Then only you need to be alert. Suppose, if at all, when you're talking to people, when you're talking to top management, you found a response which is inconsistent. Like director is saying one number, accountant is saying another number, means some inconsistency. Investigate the inconsistency. Yes or no? So write about risk assessment procedure and related activities so that you can obtain information for use in identify risk of fraud. Like now in the above entire discussion, they are telling you characteristics of fraud, how frauds can happen, what are the opportunities they'll have, entire the discussion of the frauds. Now what auditor has to do? Now it starts. Here onwards it starts what auditor has to do. Like what auditor has to do? First, you should inquire management and others within the entity, what processes they implemented, what controls they implemented, who are the departments, all that. Get an understanding of how top management exercise oversight on the management process. I will ask the director, how are you monitoring entire this business? Like what are the MIS systems? What are the management information systems that you implemented? the internal control management has established. The auditor shall evaluate whether information obtained from other risk assessment procedures indicate any risk factor. You will be doing not only risk of fraud assessment, you will be doing normal risk assessment, right? You will do a specific risk assessment for risk of fraud, and you will do a normal risk assessment. Whether normal risk assessment provide any risk of fraud information, check out. Now, once you identify any risk factor, once you identify a fraud risk factor, you need to classify this. You need to classify this. Risk, fraud, the risk identified by the auditor will be classified at two levels: financial statement level, assertion level. The risk identified by the auditor will be classified at two levels: financial statement level, assertion level. Financial statement level means what? At financial statement level, if at all you identified any fraud, what you have to do, assign personnel taking into their knowledge and ability for the given engagement. Like, if you find any financial statement level risk of fraud, assign competent person within your team to address this risk. Suppose, what is a financial statement level risk? What is the financial statement level risk? It is a risk that not a specific element will be affected, multiple elements will be affected. This is called pervasive risk. This is also called as what? Pervasive risk. Multiple elements will affect. For example, the main director who is authorizing transaction, his attitude itself is bad. Now tell me, where he will do fraud? Anywhere and everywhere. Correct? We don't know exactly where he will do the fraud. To deal with this kind of scenario, I should assign and supervise personnel having sufficient skill and knowledge. How to address that financial statement level risk? That one. Verify accounting policies. Are they genuine or not? Verify, incorporate an element of unpredictability in selection of audit. Nothing but surprise checks you perform frequently. Whenever you find a financial statement level risk of fraud, you assign personnel with sufficient knowledge and skill. You verify accounting policies, you verify accounting estimates that involve high judgments, and you verify, you make sure in your audit unpredictability exists. What do you mean by unpredictability exists in audit? Surprise checks you will be doing. Understood? Assertion level. What is assertion level fraud? Suppose inventory records are not maintained perpetual basis. What is the possibility of not maintaining inventory records on perpetual basis? Point number one, inventory sales and purchases are not updated in the record. That's why the record balance, books of accounts balance may be overstated or understated. That is one. Two, since reconciliation is not done at a frequent interval, managers and all temporarily can steal some goods. This is another fraud. Yes or no? So existence and condition assertion, there is a possibility of fraud. So if at all you find fraud possibility at this assertion level, what auditor has to do? Design external confirmation, if at all that will help you, or discuss with non-financial persons. The auditor shall design and perform further audit procedure. Nothing but what? You will go and do physical verification. In this example, you will go and perform physical verification. Remember, physical verification is one type of audit procedure to get audit evidence. Correct? Various ways: inquiry, inspection, confirmation, external confirmation, recalculation, reperformance. In all these ways we can get. Correct? Next. And I already told what should be the auditor response in case risk is identified related to management overriding of controls. Whether you identified this risk or not, irrespective or not, you must test journal entries, you must review estimates, you must review significant transactions which are outside normal course of business. What is the rationale? You must investigate. Finally, once you perform these procedures, you will get the evidence, you will get the information complete, you will get the real data. You need to evaluate. You need to evaluate the evidence. Is not that important. Okay, not that important. It is bit lengthy also. Actually, the discussion is lengthy. The question is small only. The discussion is very lengthy. Not that important. Write about circumstances where auditor is unable to continue. You understood that one of the director is severely involved in every activity, every authorization process, and the director is a culprit. You understood this after you accepted the engagement, where you felt like no matter how many I verify, somewhere I will be manipulated, somewhere the issues will be concealed. I felt, I encountered a circumstance, I encountered an exceptional circumstance that brings into question ability to perform the audit. No matter how much I perform the audit, I will end up with not getting proper evidences. If I conclude like this, what auditor has to do? See, do you have any requirement for reporting to the persons who made appointment? Check, do you liable to report this point? Because you're deciding you're unable to continue. See whether you have to report to any person who made appointment. withdraw from the engagement whether it is possible and legally permitted. If you withdraw, communicate withdrawal along with reasons to the appointing people, not just to them. Sometimes you have to report it to legal and regulatory authority. For example, in a company, if auditor resigns, he has to file a form with ROC ADT 3 along with reasons. That's it. Understood? All of you. Finally, get a representation from the management. After doing this risk assessment, understanding all this, get a representation from management. What representation? Who is responsible for internal control system? Management. Whose responsibility to conduct risk assessment originally about the entire fraud? Management. Whatever result they got in risk assessment, they should show it to the auditor, right? That is whose responsibility? Management. Management is responsible to disclose the information about frauds to auditor. Management, not only actual fraud, even allegation suspected frauds also management should disclose. They will ask you this question: what are the representations the auditor has to obtain in light of SA 240? What are the representations auditor has to obtain? 1. Auditor shall obtain a representation that management is responsible for designing and implementation of internal control system. 2. Management is responsible to show the result of risk assessment process to the auditor. Management is responsible to disclose the auditor identified frauds and suspected frauds. 4. Management has to disclose the auditor complaints, allegations received. Remember, in CARO you have clause number 11, third point, whistleblower complaint. Auditor has to consider whistleblower complaint. Correct? And finally, reporting. If at all you identify the fraud, what you have to do? First, you report it to the management. If at all management only involved, then reporting to the top management. Getting it? Then see whether that particular fraud resulted in material misstatement. In such a case, no, you may have to report it to. Write about communication to regulatory about the frauds. This itself can be asked as a 4 marks question. You know, they will ask you this question: write about reporting of frauds to management and those charged with governance. That itself can be asked. In that case, you have to write this. Sometimes I'll ask you, write about reporting of frauds to outsiders like regulatory and enforcement authorities. If auditors suspect the fraud, you shall check whether there is a requirement for you to report. For example, in bank audit, if you find any fraud, you have a responsibility to report it to RPS specifically. Although you have to maintain confidentiality, that confidentiality will be overridden by legal requirement generally. Yes or no? If there is a legal requirement, you cannot say confidential, client data, fraud and all, I will not report. Also, in some entities, you may have to report misstatements to authorities where the management fails to take corrective action. In some clients, reporting of fraud, specific provision of regulation, some standards would have given you some guidelines. You have to follow that standards. Finally, you have to document. What you have to document? You need to document regarding risk of MMS. What important decisions reached? What are the risks that you identified and assessed relating to fraud? What are the financial statements risk? What are the assertion level risk? You should document. Further, the auditor has to document. Okay, you identified and assessed the risk and you documented. What you responded? How did you address this risk? How did you address this risk? And you shall document about communications about fraud to management and their response. To whom and all you communicated, what they responded. Document. And most important documentation in this is 4th point. Whenever you concluded that there is no fraud risk factor in revenue recognition. If at all you concluded revenue recognition, there is no fraud. On what basis you concluded, you should specifically document. This is the standard requirement. How did you concluded that there is no risk factor, fraud risk factor in revenue recognition? Document it. Yeah, that's it. Standard is over. SA 240. Understood? Actually, this particular standard is so lengthy, but not that complex. You're getting it? Now look at the structure of the standard once, like before we proceed to the next part. First, they discussed the meaning of fraud, correct? First, they discussed about what is fraud. They're explaining you so neatly that you can understand the standard. What is a fraud? What the standard is asking? How many types of frauds? Why the frauds are committed? Risk factors. How do you mean by fraudulent? What do you mean by reporting fraud? Why it is committed? How it is committed? They are saying. Then they are explaining what is misappropriation, how it is committed. Yes or no? Then Whose responsibility for all this entirely? First of all, prevention and detection. Whose responsibility? Management. Then they're explaining what is your responsibility in the audit. Then they're explaining list examples of fraud risk factor. For fraudulent financial reporting, how the examples are, like how symptoms will be there. For incentives, how many symptoms? Opportunities, how the symptoms? Attitude and rationalization, how many symptoms? For misappropriation also, they are giving symptoms. So you just have to apply the standard in the real audit. See whether these symptoms there or not. Next, then you see, why this evaluation is so important. Without evaluation, you will not understand whether a fraud happened or not. Fraud risk factor is a primary result based upon which I can investigate fraud. Then you need to do risk assessment procedure related to fraud by inquiring management, understand, look at the controls, all that. Then whatever the frauds you identified, categorize them into financial statement level fraud and assertion level fraud. Once you design and implement responses to these frauds, you will be getting evidence. After evaluating the evidence, you will identify circumstances that indicate some possibilities of fraud. If at all there is a circumstance which indicates that there is a high possibility of fraud and you cannot detect it, you cannot perform the audit, what to do? And finally, okay, you performed the audit. It is not like you are not doing. You performed the audit and everything is over. Before conclusion and reporting, get representations. Once you got the representations, all that, finally you documentation everything, you set right. You found some frauds. What you have to do? You have to report the frauds sometimes to regulatory. How to report, what to report, exactly when to report, and document the entire process. Clear? So strategically it is arranged. That's it. Unless when these kinds of lengthy standards were there, you should first observe briefly what each and every subtopic is dealing with. Observe. Then read each and every subtopic thoroughly. Once you come to some 10 questions or 5 topics like that, immediately don't continue. Once recap what are all there, what is the objective of the standard why I'm studying. Then recollect that, then go to 6, 7, 8, 9, 10, for example, remaining topics. Then read that and how these are interlinked with the previous 5 topics. Why are we learning this standard? Once again, bird eye view. So once you read each and everything, give a bird eye view of what exactly the standard is dealing with. Now again, read each and everything for memorization. You directly read for memorization, it will never work. This is how memorization works. Clear? That's it. SA 240 is completed. Confident. Now we still have, just a minute, we still have 500 series. 240, 250, 260, 402, 340, 5 standards we completed. Already 12 auditing standards we completed. Totally 17 standards we completed. Out of 46 we have. And out of this 46, some 6 or 7 I said I'm not covering, which are there in the CA Into. So typically some 38, 39 standards I'm covering, half already over. In the next session, I will be discussing 500 series, all that, and I will start specialized areas. Then once specialized areas is over, then I will continue with related services, assurance engagement, all that. Once all that is completed, then I'll come back to ethics. Maybe if possible, before coming to ethics, I will do risk assessment chapter and strategy chapter. Then I will start ethics. Once ethics is completed, 80 marks syllabus pakka completed. Clear? Then internal audit, forensic audit, briefly I will discuss. That's the agenda for the next 3 sessions. Clear? Shall we wind up? Okay, yeah, take care.